What's going on out there, good people, and welcome back to LMD Trading, where I am living my dream trading. Sitting back down at the desk to do a follow-up to today's recap. That recap was for trades taken on May 17th, 2023. It was a green day, but I was not satisfied with my trading today. So I kind of sat back down looking at the charts, and I figured I would make a quick video just kind of going over a particular trade in a little more detail. I had one of my viewers make a comment stating that kind of hard to learn because my success rate is 100%. I wish it was. But I also made a reply back to that comment, letting them know that my high success of a win rate is actually hindering my trading. It is actually hindering my trading because I'm not letting my trades actually work. So once a trade goes green, I am more inclined to get out of that trade small green than to either let that trade go to target or let that trade stop me out. So it's actually hindering my gains. And I have noticed this over the months and over the years. So just wanted to put that out there. But I also wanted to look at these trades this morning. In the recap, I made the comment about how many contracts I had taken, and that was actually me sizing up. Usually I take either one or two contracts. This morning, first trade, I took 4 contracts. I stayed in that trade a little less than 2 minutes. I was in that trade 1 minute and 50 seconds with no reason to get out of the trade. Nothing on the chart was telling me to get out of the trade, and I got out of it. And no sooner than I got out of it, I jumped right back in it again. Literally, like I grabbed 3 contracts this time. So still sizing up more than the usual 2 contracts or 1 contract, and I grabbed 3. This time I stayed in the trade 8 minutes and 50 seconds. First trade, I make $14. Second trade, I make $20. So I make $34 total on this particular stock. We can call it the same particular trade. Had I stayed in this trade and actually let it work, never would have stopped me out. Probably never would have went break even. And I would have hit target, and it actually went in excess of my target. So I'm gonna bring up Thinkorswim real quick. We're gonna look at it. Particular stock was the SPY. You know, I like to kind of trade the SPY. And this is the layout that I call my ad review, when I kind of just want to look at the SPY and see what it was doing in relation to the ad. But I think it's appropriate because I use the ad now to kind of manage my trades, kind of work my way into trades. And that same individual who had posted a comment was asking, like, how do I get in and out of trades? So this will kind of speak to that as well. But what I do want to do is switch this over to a hourly chart, just so you can kind of see what my thought process was on this trade. So on this particular chart, you see a bunch of different colored lines. I'll kind of go through them real quick. We're going to start with these purple lines that's going down. That's my hourly down channel for the SPY. So the SPY has been in a clear down channel going back a week, going back to May 10th. So during the week, I had noticed we're in this down channel, but we're also getting higher lows. We're getting higher lows on the hourly. So I dropped a trend line and it's right on top of the hourly down channel. And then I dropped a trend line just coming off of the base. So we have the hourly down channel. We got this wedge, the royal blue thick line. That is the base of this weekly up channel. So you see the weekly chart right here. This is the base. So that's that line that's coming through right there. Dashed black line is the hourly 50. That comes into play, but not too much today. So that kind of gives you a legend of what these lines represent. Purple, that's an hourly down channel. This royal blue, weekly up channel. And this was just a trend line, and I just drew it in gold. And as you notice, it was squeezing. So even though we do have the hourly down channel, it was squeezing inside of this wedge. And today, the wedge had kind of tightened up. So I'm going to switch this back over. Let's go with a 1 minute. We'll do a 1 minute chart. And now that you know what those colors represent, as I come over to when the market opened, it'll kind of better give you a representation. And I'm going to tell you what my thought process was going into the market open. So the market, pre-market, we getting these ugly candles, just dropping these ugly candles, but we're still kind of trending up. And my thought process was, if the SPY opens near the top of this wedge, I'm going to be looking to take puts and trade this back down. But also, I had mentioned that I use the ad as well. And what I found with the ad is that if it opens above 1200, which is this line right here, if the ad opens above it, near it, and it trends higher, I'm going to be looking to go long. What happened today is that it opened near 1500. My thought process on that is I'm going to look for selling pressure to come down. That's going to kind of give me confirmation to take puts or to look for the SPY to go lower. So market opens, we get that down pressure. So I'm like, all right, I'm interested in going short. And my thought on it is, I want to watch this ad go from 1500 down to 12. That will be where I'll kind of start looking for the market to kind of bounce off of the 1200 to maybe go back higher. We do see we get one green candle right there, but then it just flushes straight down through it. Next level is 1,000. And then my next level I have is right here, right around, what's that? About 625, call it there. So we'll come back over here. I'm in the trade. That's good. Not even 2 minutes later, I get out. If you look, there's no reason over here on the ad that's telling me to get out. This is what I'm using in conjunction once I'm in that trade. So nothing is telling me. First area of concern really is going to be right here. And that's what, in this trade, it had a lot of areas of concern. Right there, VWAP is an area, 50 moving average. But again, if we think about what the hourly was doing inside of the wedge, it was going from the top to the bottom of the wedge. So my ultimate target was the base of this wedge. But a minute and a half, I get scared out of the trade. I chicken out. After I chicken out, I think to myself, dude, what are you doing? Why are you getting chickened out of it? Get back in the trade. I buy 3 contracts. The market kind of pushes back up. This is a bear flag. You're going to look for this to break to the low side. It's exactly what it does. Comes down to first area of concern, which is also VWAP, and I chicken out and I get out of the contracts right there. And now I'm just flustered. And now I'm like, dude, again, look over at the ad. The ad is showing no reason to get out right there. Trade this back down to at least 1200 and see what it's showing you then. When it hits 1200, look at what it's doing. I'm going to come back over there. When it hits 1200, it has broken VWAP and it's going lower. The next candle, now we're testing the 50 moving average and it drops again. So let's look at the base of that candle. Look where it lines up to 1,000. And that's why I say I use both of these. Most times what I'll see is key areas aligning with each other. So this came down, it bases out on the bottom of the wedge, which look, just so happens to be that 1,000 points of the ad. What does the next candle do? Says the heck with you, wedge. It busts straight out of it. So I had no reason to trade that the way that I did, other than my mind being, I'm sized into this trade. I don't want it to go against me and provide a larger loss. That's the only thing I could think of that made me have that mindset. One thing that I'm gonna switch this over real quick. Oh, that's not what I want. What do I want? Personal. Let's go to personal options. And I'm looking for that one. There we go. And let's turn on live show trades. Show trades. What I want you to see is with this particular trade, I mentioned that I made what, $34? Yeah, $34. This is showing you my trade. So I'm in the first contracts at 76. I'm out at 79. Next three I'm in at 85. I'm out at 91. But let's just look at first area, or let's look at the target. Let's look at my target. That's what we're going to look at right there. So target right there, 949. Let's come on to a 949 candle. It's hitting a high of 122. I'm in, we're going to just take the first order. I'm in at 76. Had I just bought one contract and traded this to target, I would have made $50. $50 on one contract. I took 7 contracts and I made $34. That's that mind. Yeah, I won't say that word because my mother looks at my videos. But that's that mind playing tricks on you. That's that ghetto boys. This thing ultimately hits a high of $1.72 on a single contract. That's $100. And people ask me like, dude, you got a nice success rate. Why you don't like increase your risk? That's one of the reasons right there. That's one of the reasons, because had I only been in one contract, I would have easily let this thing work and would have looked for a more solid reason to get out of the trade other than, all right, we partially green. Let me capitalize on that. Because again, 4 contracts, I let this go to target. I let this go to target right here. Call it 125. That's $50. That's a $200 trade. Now I'm exponentially seeing those gains go up above the normal 50 that I'm usually looking to get out of a trade. I just didn't let it work. Didn't let it work. As the title of this video is going to say, I chickened out. I chickened out. But I'm gonna go ahead and wrap this one up, trying to keep it under 10, and we're at 15. So if you still here, still watching, I appreciate it. If you hadn't already hit that like button, please do so. If you're not subscribed, please think about subscribing. And as always, we can continue the conversation in the comments. Be back tomorrow. Peace.